The stock market, as measured by the Dow Industrials, stands less than 100 points from its all-time high reached over 5 years ago. For those investors traumatized by the financial panic of 2008-2009, there is still disbelief that the market is in fact recovered. If we can reluctantly revisit the fall of 2008 for a moment, you may recall that there was the general feeling that the market was in free fall. Panicked individuals felt that the market was inflicting permanent damage on their portfolios. At the time, this feeling was palpable. There seemed to be little support for the market and even less reason for it to recover anytime soon. Only in hindsight, with the market approaching its former highs, can we gain the perspective that may help us to endure the next inevitable downturn. Something that should be understood is that what we experienced 5 years ago is statistically quite rare, a perhaps once or twice in a century event. I know that it may not seem that way due to the proximity of the fall, but that is what history tells us. Markets, as they have now proven, are self-correcting mechanisms. They get to a certain height, buying becomes unsustainable, and they fall. As values at the bottom become compelling, buyers re-enter the market and prices begin to rise. Unfortunately, the reality is that we feel exactly the opposite at these inflection points. At the top, we believe that there is no reason for prices to drop. At the bottom, we believe that there is no reason that the prices will not continue to drop. That is why successful investing is so difficult. As natural as the inclination is to outsmart the market, especially when it is in one of its manic phases, remember that the collective wisdom of the market is always smarter. I'm Tony Ogorek.